It looks like the path to a $20,000 XRP has just begun, and it's being built in secret. Yes, a single update from Ripple could open the door to the next phase of global finance, one that combines the power of large institutions, clear regulations, and privacy into one powerful force. This isn't just another report on the project, it's the last piece that could change the way trillions of dollars move around the world. I'm not telling you what to do with your money. Here's the thing, Chad Steinraber from the XRP community just said something that shocked everyone in the crypto world. To get to $20,000 in XRP, you need to be private. As soon as that was said, Ripple released an official update through RippleXDev that confirmed privacy is not only coming, it's being built right into the XRP ledger at the protocol level. Let me say this first, before we get into this news and why it's so important. I've put together something that helps you understand what's going on behind the scenes and how all of these parts, like privacy, institutional settlement, and the new direction of the XRP system, fit together. Regulators can't sign off without being held responsible. With private that can be programmed, we can do both. What could make a huge difference is that line, programmable privacy. It was sent by A.J. Ollis, who is a cryptographer and the senior head of engineering at Riplex. Not just any coder, that's not him. This guy graduated from Johns Hopkins University with a PhD in computer science and has spent more than 10 years making systems that protect privacy for blockchain and other places. Now, he's putting that knowledge right into the XRP system, where he wants to build infrastructure that is secure, scalable, and good enough for institutions. This is what he said. Now that blockchain is moving into its next phase, which will be shaped by institutional acceptance and real-world effects, the question is not whether or not financial systems will move on-chain, but how they will do it. Institutions need technology that can grow, is compliant, and can be trusted, but doesn't lose the neutrality and decentralization that make public blockchains useful. That is the problem that Ripple is trying to solve, since money can't work without privacy. But blockchains are based on being open. Take a moment to think about that. In order to keep customer information, balance sheets, and internal activities safe, banks, payment providers, asset managers, and insurance companies all need to follow these steps, but everything is open to everyone in most blockchains. Everyone can see what, when, and how much is being sent by each person. In real life, that just doesn't work for money. This is why Ripple is putting privacy right into the XRP ledger. Let's break down what programmable privacy really means. This isn't about keeping bad guys secret. It has to do with power. It means that honest people, like banks, groups, and even regular users, can choose what information is shared, with whom, and how. That's strong. Because in real life, you would never log into your bank account without using a safe protocol like HTTPS. But every day, millions of deals happen in crypto that are open to everyone. Ripple's answer fixes that. They make sure that transactions are private while still being fully legal and able to be audited when needed by using technologies like zero-knowledge proofs, CKPs, and trusted execution environments, TEES. This is how it works. Only one person needs to know something to prove it is true. For instance, that a transaction follows KYC or AML rules without showing the private information that's behind it. That means that businesses can make sure they are following the rules while keeping customer information safe. TEEs, or trusted execution environments, keep the private data inside transactions hidden from everyone but those who are allowed to see it. This is true even when transactions are being handled or verified. These are the building blocks of customizable privacy, a kind of privacy that works with rules instead of against them. Now, why does this matter for the price of XRP and its use by institutions? Because big banks and other financial institutions have been waiting for this for a long time. They can't use open ledgers for cross-border settlements, tokenization of assets, or managing liquidity if privacy and responsibility can't live together. And that's exactly what Ripple is building. The update even talked about something very important, getting bigger without losing trust. Ripple brought up the traditional trilemma in blockchain: security, freedom, and the ability to grow. Pick two. That trade-off starts to go away, though, with ZKPs and private computers. Confidential computing enclaves let private financial processes run off-chain, while on-chain outputs can be checked. That means speed, low cost, and following the rules all at the same time. This gets rid of one of the biggest problems stopping the whole world from using blockchain: believe. A lot of settlements can happen when institutions can do business privately while still making sure they're following the rules. On the XRP ledger, things like corporate payments, tokenizing real-world assets, issuing stablecoins, loans, and derivatives all happen. Crypto Aries said it best when she said that customizable privacy makes private DeFi possible, which is decentralized finance that stays compliant and can be checked. It's like getting the best of both worlds. The openness and speed of blockchain, but the safety and privacy of traditional banking. As Krypton Ritter put it, the XRP ledger's path forward feels like a breath of fresh air at a time when AI, spying, and big tech monopolies are making privacy go away. It's making a banking system that respects privacy and holds people accountable without giving up either one. So far, it seems to be linked to Chad Steinreber's main point, the 20,000 XRP idea. This is what he said for years. XRP was never meant to be traded by regular people. As individual holders, we were like the warm-up pitchers before the game. Institutions will now take over and run the global financial plumbing. That is where the idea of supply shocks comes in. If customizable privacy finally lets institutions use XRP for basic financial tasks, like tokenizing government bonds, stable coins, or real-world assets, then the amount of XRP in circulation could drop by a lot. And because it's used for high-value trades, demand goes through the roof while supply goes down. That's how exponential price changes work, which is the type of change that could theoretically take XRP to a whole new level. What Ripple just did shows that they're not just talking about it, they're also building it. They are adding secure tokens that can be used for multiple things, zero-knowledge proofs, changes to the firewall, and decentralized identifiers. These are all meant to make the XRP ledger the standard global payment network for regulated institutions. All of these things together make what Ripple calls institutional-grade privacy. And this is a huge deal for payments made across borders. Let's say a bank in Singapore sends a bank in London a $500 million tokenized bond payment. They can show that they are following the rules and settle right away, but their rivals can't see their internal accounts or liquidity positions. That's possible with programmable protection. This is why Chad Steinreber says privacy is the key to $20,000 XRP. Privacy isn't just about safety, it's also about letting a lot of people trust each other. They will use the system once they are sure they can trust it. It's in high demand as soon as they use it. Ripple has set up XRP platform to be the first blockchain that can handle that future. It is built to be compliant, private, and scalable. This isn't just an idea, it's already happening. A New York lawyer and crypto researcher named Phil Kwak recently talked about Ripple's RLOSD stablecoin, which is based on the XRP ledger. He said that sending RLOSD only costs a few cents and happens right away, while sending $10 through a regular wire transfer can cost $15 or more. Not only is that a crypto benefit, but it also changes the way payments are made in a big way. Even more growth is happening at Ripple. Their university blockchain study program just gave $1.3 million to UC Berkeley to start the Berkeley Center for Digital Assets. They are going to look into digital twins, tokenized assets, and blockchain-based pricing systems with RLOSD. Ripple is pushing academics, lawmakers, and institutions to work together. This is setting the stage for a financial system where XRP and RLOSD can move together like real-world assets do. It could not be a better time. The XRP ledger could become the most trusted and legal layer for global banking as privacy can be programmed, rules become clearer, and tokenization speeds up. Because in the end, this isn't just about deals, it's about progress. The world's financial system is already getting ready for the next era as Ripple's privacy layer takes shape. We're seeing the change from public testing to institutional adoption, and XRP is right in the middle of it all. The privacy update isn't just a function, it's also the key to the full institutional use case that Ripple has been working on for more than 10 years. Let's look more closely at what this actually makes possible. Institutions can do things they have never been able to do before when programmable protection is added to a public ledger. People can send and receive money around the world, turn real-world assets into tokens, and even lend money or trade derivatives in a safe and secure environment. That means a bank can turn a bond into a token, settle it globally in seconds, and still follow all the rules. No one outside the bank can see how its liquidity or risk changes or grows. Not only is it faster, but there is also a whole new level of faith. For years, can it scale? Wasn't the most important question about blockchain acceptance. It was. Can the government trust it? Up until now, the answer has been no. Blockchain was both strong and weak in terms of how open it was. Everything was shown. This is no longer the case with Ripple's new direction. Zero-knowledge proofs, private computing, and decentralized identifiers make it possible to achieve regulated privacy for the first time. This is exactly what is needed for wide institutional acceptance. It looks like this is what AJ Alice meant by his post on RippleX. Privacy and responsibility don't go against each other. They work together. Both are possible, and when they are, the biggest banks in the world can finally step in. All right, let's talk about how this works. Imagine a global bank moving hundreds of millions of dollars between its branches in different parts of the world. These days, that process takes days and costs thousands of dollars in fees. It uses SwiftText, middle banks, and reconciliation systems. There are multiple places of failure and privacy exposure in every transaction. With programmable privacy on the XRP ledger, that same organization could make the transfer right away, in private, and in a way that could be proven to be legal. Zero-knowledge disclosure shows the authority that the business is real. The other person gets the money right away, and it only costs a tiny fraction of a cent. That's not just an idea, that's what Ripple is building, and it has effects that go far beyond payments. Real-world assets that have been tokenized, like government bonds and real estate, can move freely across networks thanks to programmable privacy. This doesn't reveal private information like partners or portfolio composition. Adding features like selective audit keys lets regulators or auditors only get in when they need to, keeping day-to-day work private while still following the rules. That's how banking systems change over time, not by tearing everything down, but by making it better from the inside. Phil Quack meant this when he said, "Every technological revolution doesn't start from scratch, it builds on what has already been done." He's right. In the early days of crypto, it was all about anarchy and guesswork. Bringing blockchain and the old system together in a way that lets both work together is what this new era is all about. Ripple is not trying to destroy the system. Instead, it is building it back up from the inside. And that's the change going on now. In 2013, the early days of crypto were chaotic. The goal was to get away from old methods. But after 10 years, 2025 is a turning point. Institutions that used to ignore crypto are now adding it to their plans. What lawmakers used to be hesitant about are now writing frameworks. They used to ban it, but now they're trying it. Ripple has spent the last few years getting XRP ready to be the link between everything. With zero-knowledge verification and private token transfers, institutions can now handle situations in liquidity, hedging, and arbitrage without sharing their strategy or internal books. This makes XRP not only quick and cheap, but also a good choice for big financial transactions. This is the link between small-scale investment and large-scale settlement. For most people, XRP has always been about price charts and guesses. But for organizations, it's about privacy, trust, and following the rules. The ledger will change from a public token market to a global financial backbone as soon as these features go live. That's when Chad Steinreber's plan starts to make sense. As soon as XRP is used as the base asset for tokenized liquidity, it stops being a trading token and becomes a part of the financial system. The main source of liquidity will no longer come from retail buyers. No, banks, managers, clearinghouses, and regulators will hold XRP. Now, they will all use it to settle real value across networks. That's what Steinreber meant when he said XRP would never be used for everyday things. As early liquidity providers, we were able to test the rails before banks took over. And when they do, circulation drops by a lot. Let's do a test of our thoughts. Let's say that institutions start tokenizing assets worth $10 trillion on the XRP ledger. This is a small part of the world's financial markets. The amount of XRP in circulation could drop by 80% or more if the total supply stays the same. This is because institutional holding will lock it up for settlement and collateralization. When that happens, rumor doesn't help find the price. It comes from usefulness, from rising demand meeting falling supply. Privacy is what makes it all possible. Because no institution can settle real value in public without private. Regulations won't let it happen if it doesn't follow the rules. Ripple's customizable privacy brings these two things together. It works for both institutional trust and regulatory monitoring, and it doesn't hurt decentralization in any way. That's why the time of this update is so important. Regulatory systems all over the world are getting ready. Within the next year, new bills and revisions in the US should make it clear what kinds of digital assets are available. The MiCA structure is now being used in Europe. Asia's Monetary Authority of Singapore is making models for how tokenized finance can work with other types of finance. The plan for Ripple is in line with all of that. When it comes to organizations, privacy lets them play. RLUSD gives them an on-chain dollar that works. Plus, XRP is the link that makes it all possible. That's how Ripple's environment is now broken down into 3 layers: privacy, security, and easy access to money. Also, Phil Kwok made it clear that this method is not meant to replace traditional finance. It makes it better. He told us that we need to use the things we already have. Ripple knows exactly what you mean. They don't want to take the place of banks. They're making it easier for banks around the world to work together faster and cheaper. The old system and the new blockchain are coming together in this way. Check out the teamwork in Berkeley. The RLUSD-based $1.3 million contribution from Ripple is going towards study into digital twins and asset verification. There's no formal filler in that. Digital twins are digital copies of real things like houses, cars, and infrastructure, and checking them on blockchain needs computations that protect privacy. This study will directly affect how the XRP ledger is used in areas like managing the supply chain, tokenizing real estate, and loans backed by assets. It's the next step toward real-world use. At the same time, the crypto business as a whole is beginning to understand that privacy is the last frontier. Recently, Charles Hoskinson, founder of Cardano, said that selective disclosure and reasonable privacy are what crypto needs to be used all over the world. The whole financial industry can move to blockchain once it is possible to separate private data from public data in smart contracts. Yes, that's what Ripple is making. This coming together of privacy, compliance, and scalability is making a $1 trillion move possible. Tokenizing will start happening to stocks, bonds, commodities, and even government bonds in the next few years, and the ledgers that can handle these deals quickly, privately, and legally will be the ones that people use the most. The XRP platform is being built to be that system. For now, the cash issue is taken care of by on-demand settlement. With programmable secrecy, it now solves the privacy issue. Once rules are in sync, volume is all that's left, and volume comes after trust. From RLUSD to private multi-use tokens, everything Ripple does now is meant to win that trust. And the response from the XRP community shows that they are aware of this. Crypto Airy, Chad Steinraber, Krypton Ritter, and other people can see that things are going to work out in the long run. Ripple is not in a hurry to get short-term attention. They are building the core of blockchain banking for institutions. You can almost feel the change coming. There is no longer a focus on retail excitement or rounds of speculation. It has to do with real infrastructure, relationships, and uses in the real world. What will happen when the biggest financial players in the world start doing business on the same ledger quickly, privately, and legally? Liquidity comes together. Markets go around the world. There is no more friction in settlement. As the ecosystem's original currency, XRP acts as the glue that holds everything together and provides a neutral liquidity layer. This private update is a sign of that. Not just a trait, but also a sign. People who work with money around the world can trust this record. You can add to it. It lets you use it without giving up privacy or following the rules. This is how Ripple changes the XRP ledger from a network for retail tokens to a full-scale backbone for institutions. Privacy doesn't just change how XRP moves, which is what's really interesting. It changes how it moves. When privacy can be programmed and all institutions, from banks to sovereign states, can settle, hedge, and trade without giving away their whole strategy, XRP changes from a currency to the base of a new global trust system.